Hey, good morning, troopers. The screen share is active. That should be coming out clear. Hopefully you can hear my voice too. Just a reminder, it's a webinar presentation. It's live. It does suck a lot of juice. It uses a lot of internet bandwidth, so it is worth closing down any other programs that you might have open that would need those resources, maybe TweetDeck or Skype or something like that, and hopefully you should get a fairly uninterrupted broadcast as a result of that. So it's Monday the 3rd of June 2013. It's the beginning of a new month, which is always quite exciting, and it's even more exciting this time round because the beginning of the month has not happened in the middle of the week. It chose to happen over the weekend. What that means is that our weekly opening range this week corresponds with the monthly opening range, and from a general kind of strategic point of view, this is something that I tend to do at the beginning of every month, which is that I just mark that opening range, and I have normally quite a huge objection to trading against the direction of the month. I tend to be very, very aware of the fact if that is what I'm doing, and at the same time, if the direction of the month is important to you, you know when the direction of the month is the most important? It's at the beginning of the month, because that is a price, or it's a level that the price has a habit of moving away from, right? So if we're taking that as our marker and saying, well, this is the price at the beginning of the month, whichever direction or the proximity of price to that level, whether it's above it or below it, will end up determining the net bias. At the moment, most of the prices are pretty much near the open. They haven't strayed very, very far from the opening ranges. Most of the prices, it's like 50 pips, 60 pips here and there, right, at most. But there's a lot of data due out this week, and certainly one of the more exciting weeks as far as data is concerned. We've got the Reserve Bank of Australia, which is going to be reporting. We've got the Bank of England, which is going to be reporting, and we have the ECB. If that's not enough for you, then there's a whole raft of purchasing managers indexes being released, a whole raft of PMIs being released. We've got data coming out of China, Japan, the UK, the Eurozone, and if that wasn't enough, then there's the NFP at the end of the week, right? So we've got the non-farm payrolls figures coming out of the States, and what with Bernanke purporting to have started paying attention to the data and started paying attention to the numbers, I guess we would start paying overall attention to those numbers too, and maybe start believing that they actually mean something, right? So a heck of a lot of data coming out, and I reckon certainly as far as the Fed's QE policy is concerned, and whether they are actually going to start pulling back from their $85 billion of purchases each month, I guess it has become their stated objective to monitor the data in order to decide. Personally, I don't think it's going to happen straight away. It's not something that's going to happen overnight. If you were to take a sensible course when you're looking at the data, it's never one set of figures that matters. It's the overall trend in that data that matters, and that's something which could take some months still yet in order to establish itself, right? So lots there happening data-wise. Like I said, from a technical point of view, it's the beginning of the month, and at the beginning of the month, what really matters more than anything else is the proximity of price to a level, whether we're above the monthly opening range or we're below the monthly opening range. That will define our net bias, and that is really the key technical tool which is required in order to trade, particularly during the first week and those opening shots at the beginning of each month. Okay, what are the technicals? There's only a handful of charts I want to look at this morning. In fact, the charts that I want to look at, you can probably count them on the partitions of a single finger. Right, so you know what, I have a habit of expanding these things out and making them last. Let's get started. Let's look at the yens first. So I'm starting here with the USD JPY. From a technical point of view, just understanding the overall picture, and I think I've kind of narrated it week after week, which is that I've got a shallow channel for the USD JPY, and she's moving from the top of that channel to the bottom of that channel. As far as what I would like to see happen is concerned, I'd like to see a move back up to the top of that channel. Eventually I'd like to see the price break through that channel, then on a pullback. Because it's been resistance, I would suspect that it's going to turn support and then make her way much higher. The only kind of issue right now is that it's not so much an analysis, it's more a case of me saying, look, this is what I would like to see happen, and if that is happening, then it does give me the opportunity to trade, because you develop your expectation, and once she starts playing out according to your expectations, that's when you can start getting involved in the trades. Right now, as far as price is concerned, she's falling, she's not rising, she's falling, that's kind of obvious. And so I have 2 points of view. You know, it's like either this is going to be a shallow correction or this is going to become a deep correction. And either way, whether it's going to be a shallow correction or whether it's going to become a deep correction, I'm not really interested in standing in its way. Alright, so what I want to see is that if the bull trend resumes, right, now I want to see it resume first. I want to see that momentum north first. At that point I can say, you know what, I can get involved now. Alright, and right now we've got enough going on structurally. Right, so we've got this kind of downtrending trend line. We've got enough going on structurally to be able to say that in order for the bull trend to resume, I need to have a trend line break. Right, so there needs to be something which represents a trigger to say that the bull trend is resuming. Alternatively, I could say, you know what, I want to wait for a new high. Alright, you can kind of get that kind of sense of caution here, right? Well, wait for a new high. Let it bust back above 102.20. Let it bust back into the 103. Alright, and once it's back in the 103, then I'll look for a higher low, and then for a further expansion north. Alright, but I'm not prepared to assume. that the bullish rally is starting from here, from this particular point, even though from a kind of technical perspective right now, and it is still a technical perspective, you would want to see the 100 hold as a marker. You'd want to see the 100 hold as a marker. You want that 100 to be a line in the sand for USD JPY. And if the 100 can be a line in the sand for USD JPY, then to the upside, there's no reason not to be thinking 107. Alright, so early to say just yet. Based upon the current structure, look, she is falling. We do have some resistance structure which has been established here. It's not there on the widest time frames. On the widest time frames, you want to see something a little bit more parabolic like that. You want to see something a little bit more parabolic like that. And at the moment, what we've had really is something like that. Still inside of this wave. So structurally, nothing's changed. Structurally, it's still a bull trend. It's just a question of whether this fall which we're seeing now, and it's been a very slow and steady fall, right? It's one of those where if you've been buying inside of that, it's like the death of 1,000 cuts, right? Because every day you're just finding it's 10 extra pips against you than it was the day before. So, is it the beginning of a bigger correction? Can't say just yet. 500-600 pips later, you probably couldn't say, yeah, that was a pretty big correction. But we can't say just yet. Right now, it's about the 100 level. It's about the 100 holding. But you want to see her on fire first. Hand on fire. You want to see her on fire first. You want to see that momentum break north. You want to get a trend line break. You want to see her hitting new highs. Get a pullback. Then you can be buying. Otherwise, I'm cautioning the buying. At the same time, I'm cautioning the selling. It's more a case of sit aside, wait, let the picture develop. Even if we get a steep correction, and there's that word again, correction. I think that we are eventually going to hit higher highs on these yen crosses. More a question of when rather than if. But if it is going to be a deep-seated correction, you just need to let it finish. Right? If you are getting involved in the short plays, and like I said, there's the beginning of something. There's enough there where if you wanted to get involved, you'd say, well, I'm looking for a defense of 1 or 220, either structurally somewhere where you can define risk. You'd still have to do it in the context of a counter-trend trade, rather than in the context of a trend trade. All right. So first up, we're looking for 100 to hold. Okay. After that. After the 100, the next interesting level is coming in here. That's coming in somewhere between 98, 98.30. And if you're looking at this on an hourly or on a H4 time frame, it's just this cluster here. It's that cluster on the inside. I called it the inside cluster. It's a technical setup. If I were to take a blind long on the USD JPY, i.e. without any consideration for momentum or the price is dropping and I'm buying as it's dropping, that's the place where I would do it at. And if she fell below that cluster or she fell below that low, I would exit. Alright, so that's the only place where I would buy blindly right now. And it would be something which is just based off the back of a technical SR play that you'd expect support at around that area, right? So that's it as far as USD JPY is concerned. For the time being, she's falling. I'm a buyer. I'd like to see her rally before I start buying. If I'm very conservative, I would wait for her to hit the highs again before I think about buying, and then at that point I can start assuming that she's going to make new highs. Ultimately, I want to see a break of that upper channel wall. If that happens, I think there will be a heck of a lot of pips to be made on USD JPY. You'd be looking at a much greater expansion north on this instrument. So a lot of price expectations, but they need to start playing out first. As far as the technical play is concerned, it's that 98 area, 98. Top of that cluster's around 98.35. Bottom of that cluster's under the 98 handle. It's the only place where I would buy blindly. It's quite sweet that corresponds with a lower wall of a channel which I've got drawn there. I think that's quite interesting. We'll just have to see how the price responds if and when it reaches that level. Next one up is the Aussie dollar, AUD USD. Again, I think we started discussing this last week, that you know what, I'm kind of long on the Aussie dollar. I have long positions open on the Aussie dollar. We started playing last week these kind of long trades, and that same levels paid off 2-3 times, and now we've got another trade on. We're looking for a move back up towards the 101 handle. There is some caution about AUD USD. Alright, the caution is that this is a counter trend trade. We are fighting a huge monthly momentum that developed during the course of May. Alright, it's huge. You look at that on a monthly chart, it's scary. Alright, but we've chosen to fight it. What's the key level? The key level is being defined by our weekly and monthly opening range. Okay, so you know what, we had April, which was a huge bearish month. We've had May, which has been a huge bearish month. There's no reason to assume that June won't be. Right? There's no reason to assume that June won't be. So what we're doing is we're using that monthly opening range, and we're saying as long as the price can stay above that range, then there is room to retrace into the last monthly candle, and potentially that could push us up towards the 101 handle. But if it happens that the price goes and breaks down below that, then you have to sit it out at that point. You can't be assuming at that point that we're making a move for the 101, right? Because what it means is that June has turned bearish, and if June has turned bearish, then you want to be looking for further extensions to the downside, and it is always safer to be looking for a continuation of this kind of momentum than to be looking for its reversal. Alright, it's always safer to be doing that. So our position on the Aussie is that we're long. We recognize it's a counter trend trade. We recognize that we're fighting it. That will influence your position size more than anything else. It'll just influence your position size. You're going to be a little bit more careful with this than you would be when you're chasing the momentum. We're trading it on the back of a price expectation. We're chasing it on the back of a price attraction point. That's what our analysis has been founded on. All right, so just a little bit of caution. In the first instance, just watching that monthly opening range, and I think that as long as the price can hold above there, as long as the June monthly candle is not turning overtly bearish, then I think that it's safe to be looking for those long trades. But the moment that candle turns bearish, you really want to let go, and you want to cut it, and you can come back to it another time once you see momentum headed in that direction. Alright, so that's the Aussie. I'm kind of holding that opinion about looking for the long. Alright, I'm still interested. I'm playing it, but you have to have a cutoff point. Alright, you have to recognize what it is that invalidates that analysis at this point in time. Right, so what would invalidate it at this point in time would be for the monthly to turn bearish. Certainly a break below last month's established low, and you want to be out of that trade. You do not want to be holding it any longer than is absolutely required. One of the other considerations to be having, and here's the GBP AUD. Sometimes it helps to do a little bit of kind of intermarket analysis, and I like the GBP AUD for that. You'll remember the last time when we were looking at GBP AUD, we were talking about reflection, and at that time the price was at near the 151 handle, and we were saying, you know what, you're going to come back to this chart in a few weeks time, and she's going to be up there 58, 59 into the 60s, and that's exactly where she's gone. Surprise, surprise. But the reason we're turning our attention to GBP AUD now, and it's all to do with that price attraction on AUD USD. You know, if AUD USD has to move up to 101, then you're going to see Aussie strength and Aussie weakness being reflected on the crosses too, not just against the dollar. Right? You're going to see it on the crosses too. And we've got the RBA tomorrow. Maybe that could be the trigger. So I was looking at GBP AUD and I was thinking, my entries on the Aussie are blind. What if I could get a clean technical entry on GBP AUD looking to push south? What would that technical entry consist of? And I think the chart is a lot cleaner. The chart is a lot cleaner, it's a lot clearer. There's a very strong uptrending line on GBP AED. If you are going to get a resumption of Aussie strength, you're going to see GBP AED breaking down too. You're going to get a trend line break. And maybe that trend line break can be the technical trigger. Alright, so she's coming up and she's hitting some highs. She's coming up and she's hitting some highs. I rather suspect that she's going to end up pushing through those highs just a little bit further. I have drawn some support resistance trend walls on my screen. I wouldn't be surprised if she goes and reaches those. I think GBP AED is likely to reach into those 60s, maybe 63 even. She doesn't look like she's done yet. Alright, so like I said, you have to keep that open mind. Alright, with the AED USD, it's about that monthly range. If the price breaks below that monthly range, that's not Aussie strength, is it? That's Aussie weakness. GBP AED will carry on moving higher. If we are going to get Aussie strength, you should get a trend line break on GBP AED, and that will give you your risk defined trigger in order to be looking for that short trade. As far as the general picture is concerned, I think that GBP AED is going to continue to range. I don't think that she's about to break out of this range, i.e. there is going to be a ceiling on this. There is going to be a ceiling on this rally at some point, and then you can look for another move back down. But that's just a kind of general price expectation. Like I said, it requires a technical trigger if we're going to end up playing it. If we're going to end up trading it. Okay. So all eyes on the Aussie. Right, we're looking at USD JPY. We're looking at Aussie this week. Okay, trades. It's the pound Swissy. Alright, so let's turn our attention to the pound Swissy. Again, this is one that we've been looking at practically every week, if not every week, every other week here in this webinar. And as far as the kind of analysis is concerned, we've been looking for the pound Swissy to bottom somewhere here. Alright, and I think it's done that now. You remember the last time we were looking, we said, we're looking for kind of a double bottom here, and I think it looks as though that's formed. That kind of tight structure that you're seeing here, quite often it reflects a bottom. Alright, I think that's formed. So in any case, I've taken a long trade on pound Swissy. My stop is near the 43.50 area. I'm giving it quite a wide berth. I'm giving it a wide berth because my price expectation to the top side is to head into the mid 50s and maybe even beyond, right? Maybe back into the 60s. So I'm talking about 1,000 pips to the upside. I can afford to give this a little bit of a wide berth, but I've taken a position. It's coming in somewhere around here, so just marginally in the money. It's not a great deal in the money, but this is according to the plan that we laid out here in this webinar. I don't know if we discussed it last week, but certainly we discussed it the week before that we're looking for the long on the pound Swissy, and that should kick in around here. She's rallying now, and I'd say it's well worth buying. Right, so just buy the pound Swissy, looking for it to move higher. You take on a little bit. We're position building with this. Alright, so if you remember what we did with the Euro GBP last year and then at the beginning of this year, it's exactly the same thing. We're position building. We think she's going to move much higher, and so I've bought a little bit, and once we're hitting the highs, 47.50 area, I'm going to look to buy a little bit more. And if we break the new high, I'll look to buy a little bit more, and I will build that position. And I think that to the top side, certainly she's going to head towards that 50 handle, and I believe that if she's able to penetrate the 50, there is a lot of room beyond that. certainly pushing up towards 53 and then 55. So anywhere between 500 and 800 pips to be played for in the near term. When I'm saying near term here, I'm talking, between now and in the near term, I'm talking, maybe this month, next month, within this next couple of months, right? That's the near term as far as the pound Swissy is concerned. Certainly, she seems to be catching a bid right now, right? And I am buying. I'm looking for her to move higher. I'm quite happy now to be loading up in this price zone, looking for expansion north on the pound Swissy. So give it your due consideration. Give it your due consideration. It's worth taking a look at. And from a position play, again, there's that huge target. It just makes it very, very much worthwhile. Okay, those are the. In fact, those are the three that I'm looking at this morning. I'm not really looking at much else. Let's have a look what we got going on here in the Q&A. Okay, Mr. C, what do you consider a retest on which time frame is valid for you? Which chart are you referring to, Mr. C? Or is that just kind of general technical question? What do I consider a retest? A retest, I guess, by definition, just from the meaning of the words, is when the price revisits a particular level. So that would be a retest of that level. The time frame doesn't really matter. If the price has reached somewhere, it would hit it on every time frame, isn't it? Right? So so I'm not sure I've necessarily understood the question properly, if that's what you're asking. But you know what? If I said the price is going to retest here on pound Swissy 155, it would retest it on every time frame, wouldn't it? You'd see it on an M1, you'd see it on an M5, and then 15, a H1, a H4, a daily, that the price has reached that particular level. Structurally, when I'm doing my charting, I tend to do my charting on a H1 and a H4. When I'm taking entries, I take entries on the M5. Right? So back in the olden days, when I were a young man, I used to do a lot of scalping, and so I'm kind of used to trading off of a M5 time frame. But my charting is always done on a H1 and upwards. Okay. If you can take a look at the pound dollar, it would appear to have bottomed out, and that higher levels could be expected mid-term. What would your targets be? Certainly, yeah, it seems to have been catching. It seems to have been catching a bid this morning. My general expectation for the pound. There's a couple of things about the pound. Some of them are disturbing me, some of them aren't. Alright, but I have a few issues with the pound right now. To the upside, there's a lot of things in the last wave which stand out. Right, so that pin there stands out. I wouldn't consider it unusual if the price went and retested that area. We have a support area here at the 60 handle, and you can kind of see that quite clearly. It's a similar kind of pattern that we're looking at on the Aussie, and the price broke down from there. It hasn't turned resistance yet. It's an untested level, and usually that can act as a price attraction point. So you know what, to the upside, it's you could look anywhere on the left hand side that you like. There are a few points that tend to stand out for me, so those are the ones that I'm looking at on cable. We have this area near the 60, which is an untested resistance level. I wouldn't be surprised if that gets retested, but I wouldn't guarantee it. There's a pin here where the price broke down from. Again, I wouldn't be surprised if that gets retested, but you can't really guarantee it at this stage. The best you can do is to pick a technical trigger which establishes your bias, and then say, you know what, as long as this condition holds true, I'm prepared to be long. And if that condition no longer holds true, then my long bias has become invalidated. And right now on cable, there's any number of ways that you could choose to do that. So you could take this level here at the 50 handle and say, look, I've got support which has been established here at 50. From a technical perspective, support resistance. As long as the price is above 50, I'm long. If it happens that the price ends up breaking down below that level, then I'm going to become a short player on this instrument because the support has been breached. Alternatively, if you want to play on a very short-term basis, you could say, there's my uptrending line on GBP USD. As long as the price is above that trend line, then I'm going to be long. And if it happens that the price ends up breaking down below that level, then that invalidates my long position. In a similar fashion, you could say that there's an SR flip at this level, and you'd say, well, you know what, it was resistance, we've broken above it, pulled back, it's become support, we're bouncing. As long as the price remains above that support, I'm technically long. If it breaks down below it, then I'll go short. If you're a short player, again, you could have any number of reasons to be shorting this instrument. You could say, there's my downtrending trend line. As long as the price is below it, I'm playing the shorts, and if it breaks above it, that invalidates my short play. You kind of get the picture, right? That, you know, when we're doing the technical analysis and we're drawing lines and levels on charts, it's not that they mean anything, right? These lines, they never mean anything at all. All they do is give us a little bit of perspective, and we use that perspective in order to trade in a particular direction. And critically, and this is what is really, really important, is that it tells you what has invalidated your position, right? You know, it's the same logic that gets you in is the same logic which will end up getting you out. Alright, so it's just a case of establishing perspective, that's all. You can be, there's any number of reasons to be looking south on cable, and there's any number of reasons to be looking long on cable. I guess if you're looking south, it's just going to be generally the state of the British economy, the fact that it is kind of chugging along the bottom. You might also consider that in about a year's time we're going to have elections here. We're going to have the next general elections here in the UK. You know, those could kick off any time from the summer of next year, right? So, or certainly that would be the earliest date. I guess if you look to the upside, you might be looking at the departure of Mervyn King, and you know, Golden Boy is going to take over at the Bank of England next month from the beginning of July, Mark Carney. So there's any number of reasons fundamentally to be thinking long or short on the pound dollar, but the critical issue is how you establish that picture technically, and even more important than that, what is going to invalidate that technical picture. Once you've got that sorted, trading is a doddle, right? Because you get in, and if you're wrong, you get out. It's just very obvious that it's been invalidated. Trading like that, it's very rational, it's logical, and it removes a lot of the shades of grey. You know, and I think that's very, very important when you're trading technically. It's removing those shades of grey. As well, it stops you from becoming attached to a position, right? You know, just look how clear I am about the Aussie. It's what invalidates it. If it's invalidated, get rid of it, right? You don't need it, right? So it's important to have that. Okay, 154 is a bull target. You know, truth be told, as far as the pound dollar is concerned, in the long run, I'm seeing her way lower than she is right now. All right, this is the kind of final note. I think she's going to make her way much lower. It's just going to be a question of how she does that, right? But I don't see. It doesn't make sense. It doesn't make sense to have the pound back in the 70s, back in the 80s, something like that. I think those days are gone. And in the end, what will happen is that people will start judging the pound and the dollar on the strength of the American and the British economies respectively. And that has not been happening for the last 7 years. Right? It's been that real kind of BS. It's been bullshit. It's been that BS risk on, risk off narrative. But it will start becoming real again. And the prices will start reflecting the strength of the respective economies against each other. And when that happens, I think the pound will lose it. It'll just lose it big time. And you're looking 30s, 20s, 10s, something like that. Alright? I'm not positioning for that just yet. I'm not that brave. It's one of those conspiracy theory things I've got going on in my head right now. But in the long run, I think she's going to go. She's going to go a lot weaker. Just don't take me up on it if it doesn't happen. Okay, Addy Ion SQ. Where are you from, Addy? That's an interesting name. Yeah. Euro yen. Euro yen, it's the same. Alright, it's the same as USD JPY. All of the yens have been reflecting yen strength and yen weakness rather than the strength and the weakness of the cross. Okay, this has all been about the yen. So if USD JPY is falling, then Euro yen is falling and GBP JPY is falling, and you might get little spikes in between. Between them, but generally speaking, if you're looking at them together, it's very, very clear that it's a reflection of yen strength and weakness. And again, you know, you've got the early signs that maybe there is some kind of structural SR flip, but you haven't got the broad structure. You haven't got that going on. You haven't got the parabolic structure going on. So the yens, they are still in uptrends. Alright? They've been pulling back. They've been correcting a little bit, some more than others. On the euro yen, I think this 30 handle is critical. Just like on USD JPY, that 100 handle is critical. You know, if the 30 becomes a line in the sand, then to the upside you've got to be looking at 37. If the 100 becomes a line in the sand on USD JPY, then to the upside you've got to be looking at 107. If it starts falling, it's corrective. Alright, if it's falling, it's corrective. And it could be a short-lived correction. It could become a very, very deep correction. Right? It could become a correction of 1,000 pips. But the point of saying that it's corrective, and I've been stressing this all year, is that, you know, right at the beginning of the year, a lot of guys came out and said, oh, this is just a cyclical rally. It's just a cyclical rally. Well, you know what? I think at this stage, it's very clear that it's a little bit more than cyclical. Right? She's holding her own. She's holding her own. So it's a little bit more than cyclical. I think that there's a change in the balance of power here. And I think that yens will make higher highs. Again, it's a question of when rather than if, right? So generally speaking, I'm still long on, I'm long on the yen crosses, USD JPY, Euro JPY, GBP JPY. It's just a question of the technical opportunity presenting itself, allowing you to take that position. Right now on the euro yen, you'd want to see a break through that resistance, and as it breaks through the resistance you can buy. Just looking for another little extension. Alright? If she starts breaking down Once you've got that wider structure, that will allow you to define risk using that wider structure. Until then, I'm not interested in shorting her, right? I don't mind if she drops even 1,000 pips and I missed all of that. I'm really not fussed. I have a perspective, and I'll trade when she's behaving according to my expectation, rather than chasing her and trying to play catch up with whatever it is that she wants to do, right? So I have an expectation. Once she starts behaving according to that, I'll start playing. Until then, if I sit aside, even if I miss 1,000 pip drop, it doesn't worry me in the least part. I'll play on my terms, not on her terms. Okay, so if you do like the idea of shorting it, then on the daily, she's coming up to the underside of a support resistance wall. Alright, and it's that wall, I guess, which is going to define your risk on Euro Yen. Right, so and I guess what we're looking at here is that as she got close to that, you can see there was quite a sharp rejection from that area. But if you are shorting it, it's that wall that defines the risk, right? So you'd say, well, you know what, as long as she's below the wall on short, if she breaks above the wall, then the shorts become invalidated, right? So it's just the kind of alternative perspective on Euro Yen, if that is what you are looking for. Okay guys, it looks like that's your lot for this morning. Yeah, I've worked through the charts I wanted to look at, and we've also covered some of the ones that you wanted to look at, so I guess we've done rather well there. All that leaves to remain is to thank you all for attending. I hope you like the presentation and what you've heard. If you do, don't forget to check out my website. It's www.wmdforex.com. I do publish my analysis on there every week, and as well there is a online forex video course that you can take a look at. Thanks as well to the team at FX Street for providing the platform. Remember, if you register with FX Street, they will remind you every time I'm going to be on. They send out a little reminder email, so that's well worth doing. So I'll see you all the next time. Cheers guys, bye bye.